the real estate crash is inevitable, and in this video we're going to go through the 4 most common reasons given in terms of why we're definitely in another 2008 bubble and why the crash is definitely coming. Let's get into the 4 reasons people are giving that there will be a massive housing crash, and let's see what kind of data we have following these so that we can determine, okay, will there actually be a crash, or is this just, a bunch of dramatic titling and no actual substance? And that's what we want to get to the bottom of, using actual substance. So let's make this simple and clean. Here's the scoop. Fear-mongering videos that tell us that the housing market is bound to crash like to refer to a very simple statistic, and it has to do with information provided by Black Knight Analytics. They collect real estate data, and they like to say, or people who make conclusions from this data like to say, oh my gosh, we have 3.186 million mortgages who are 30 days past due but not yet in foreclosure, and holy smokes, we have over 2 million mortgages 90 days or more past due but not yet in foreclosure. And then usually what the fear-mongering videos or articles do is they say, oh, what if 50% of them end up going into foreclosure all at the same time? That's it. Market crash, supply up, distressed sales compound, and we have another 2008 foreclosure crisis. And so anybody making those projections, in my opinion, is using this data inappropriately to convey that there definitely will be a real estate crash. This mortgage forbearance data is the wrong data to use for that. Again, number 1, most important, we do not have data on whether or not people actually really need this forbearance. Number 2, people who can't afford their original payments are now are able to work with banks to have lower monthly payments, so they're not forced to sell. Also, the people who are in forbearance likely have positive equity. What do I mean by that? Well, in February of 2020, only about 10% of mortgages were about 10% or had less than 10% equity. So 10% of existing mortgages had less than 10% equity, which means if they have a $100,000 house, they owe $90,000 or more on the property. Well, over the last year, if people were in mortgage forbearance, they haven't taken on more debt, with the exception of their monthly payments, and home prices have gone up 13 to 14%. So the odds are a lot of the people who have taken mortgage forbearance from the beginning of this pandemic might actually be in a positive equity territory right now. So we have 3 million people in mortgage forbearance, but the people in forbearance aren't necessarily signaling that they can't make their payments, because anybody could sign up for mortgage forbearance. Still today, anybody could sign up for mortgage forbearance. Just have to raise your hand. I want mortgage forbearance. Okay, no problem. Over 60% of people have Fannie Mae, Freddie Mac, and FHA loans. And with those loan types, you get the amount that you owe just hooked on to the back of your loan, which you just repay off when you sell or refinance in the future. If you don't have a conventional loan, obviously then you have more issues in forbearance, but then you might also not be in one of these forbearance plans. You might either be making your payment or you might be in foreclosure. But that's different from this Black Knight data. And unfortunately, the Black Knight data does not provide us the correct insight that we need to say that a whole bunch of these people are going to go into foreclosure. We can't say that. The number 2 reason that people give for a crash is that this is 2008 all over again. See, unlike 2008, according to the Mortgage Bankers Association, mortgage credit availability is at the lowest point it's been in the last 7 years. So more and more highly qualified borrowers are borrowing now, which was the exact opposite of what we saw in 2008. In 2008, more and more low-quality borrowers who couldn't actually afford the houses they were getting into, were borrowing, driving up real estate prices. And see, many borrowers, in fact, who were able to qualify for home loans in early 2020 or even at the end of 2019 are now discovering that they can't even qualify for a home loan anymore because lending standards have just gotten so tight. And even if they are able to still qualify, many lending firms are just outright picking the most qualified borrowers. This 2008 all over again? Well, based on the government's intervention and banks tightening credit standards so far, the answer is no. When credit scores are going up, down payments are going up, and loan standards are going up, we're just seeing the opposite of 2008 happening. Now, what is a third reason the real estate market might crash? Well, a third reason is that interest rates would skyrocket. and then our housing market might collapse. And this is true. Yeah, if real estate interest rates skyrocketed, well, that would be very concerning to the real estate market. Usually when we see a 1% increase in interest rates, we see prices fall by about 10%. And this happened in 2018 when Jerome Powell increased interest rates dramatically and quickly. Housing mortgage interest rates increased about 1.2%, and prices promptly fell 12 to 13%. And this is a real concern, and it's one that we should pay attention to. So far, we're not expecting to see any impact to real estate pricing because housing inventory keeps falling lower and lower and lower to the point where there is no impact from this increase in rates of about 0.5% that we've seen over the last few months as bond yields have shot up. And right now we have no real expectation that we are going to see interest rates go to anything crazy like 4.5% or 5% anytime soon, like we saw in 2018, which definitely hurt the market. Because in 2018, we also had more inventory available on the market, and those higher rates really hurt us big time, but we're not seeing that right now. Now, option for a crash number 4 is an eviction crisis. Now, the eviction crisis argument is one that was a serious concern about 6 months ago, before we ever got any kind of rental relief from Congress. Now we have over $50 billion in rental and housing relief. Tenants are mostly protected from eviction moratoria, even if they've stopped paying their rent entirely. This national eviction moratorium has been extended 2 additional times already, from January to March and now to June. And it's likely to get extended again. Bottom line, out of all of this, I don't see it. But do I think it's really coming soon? Not really.